You're live on YouTube.
Alrighty, guys and girls, we are now going live on Facebook, we are now going live on Instagram, and we are going live on YouTube. This gentleman here, you do?
Sometimes I do, depending how I feel.
So, Louis, what a great day, because you're one of the few people I know that doesn't care about saying the right thing versus the popular thing, and you're happy to leave people pissed off with the truth, you know?
My word, I am.
And that's why you're here. You know, we hardly, Susan, who's the only time we've ever had a Sunday night rant? Gavin Rubenstein that day, because we had that event on. So Louis, we've been doing this 3 years. You're the second time. But I wanted to have this conversation. By the way, guys and girls, press the share button. This is going to be a 4-year university degree in 27 minutes, right? And this guy here, all he does is look at charts, looks at data. We're going to comment on the federal election and the negative gearing policy by the government. What are the implications? We're going to talk about auction results and are they flawed? Are they bullshit? We're going to talk about what happened in the marketplace in 2018. We'll do around the grounds. We're going to talk about what your predictions are, what potentially might end up happening. But Louis, how long have you been in data? How long have you been working in data?
Geez.
It's SQM.
Yes, SQM
What's
Research.
SQM stand for?
Well, it's the abbreviation for square metre.
So how did you come up with the name?
I just came up with it one day.
SQM.
Over a few drinks.
Okay. You enjoyed beer?
Oh, look, not too many nowadays, so I keep it pretty light. I have to, got to watch this.
You play soccer, don't you?
Look, not as much as what I used to, but this season I was the soccer manager for my daughter's team, so both my daughters play. So they play for Thornley Thunder. Anyone who knows Thornley Thunder, I'm sure a few of you out there do. And my eldest plays for PLC. And they both love it.
PLC, they play against my daughters. Yeah. Wow, okay. So, Louis, let's talk, you know, let's go straight into it. And the reason I want to go into this is I had a real estate agent, get ready for this, guys and girls. I had a real estate agent tell me he went to the bank, got a line of credit for $450,000 against his home. His home's worth about 1.5, and he threw the money into the general account because he's panicking, Louis. He's panicking. He's not going to have enough money to get him through December, January, February, March. How bad has real estate been in 2018?
Yeah, well, he wouldn't be the only one in terms of real estate agents. So in Sydney, sales are down between 30 to 35% year on year. That's a whopping drop.
That's massive. So that's like if you're on a salary of $150,000, someone has just come along and said, we're taking 50 off you this year. It's as simple as that.
Yeah, and as you know, I mean, agents are largely earn their income off commissions. Yeah. So it's a big hit. Yeah.
Okay. Louis, you said to me off camera, the other data that's interesting is new car sales are down dramatically.
Yeah, new car sales have fallen right away in Australia, and it's not just new car sales now, it's starting to feed through into construction as well. So the housing downturn in Sydney and Melbourne is having an impact upon the economy. Fortunately, we're not in a recession, and keeping everything else equal, we're unlikely to go into recession. But that's the question, will everything else stay equal? And there's some question marks in terms of the future events that may well unfold.
Okay, around the grounds, tell me, around Australia, how shit was real estate? Let's talk about the bad ones, the good ones.
Yeah, well, look, I mean, all markets have been affected one way or the other by basically what's been going on, which is a chokehold on credit, and it's affected all housing markets.
A chokehold on credit? Yeah. They just suffocated money?
Yeah, basically APRA and the Reserve Bank of Australia have been wishing to create a deleveraging event in the market, particularly for Sydney and Melbourne, and they've succeeded. They've managed to do it. And how have they done that? They set down specific rules to the banks which contracted investment lending. So firstly, the target was property investors. And this actually started back in 2015, and they've just been slowly but surely ratcheting up. And the final straw that broke the camel's back actually came last year, when they had a crackdown on interest-only lending. At the time, interest-only lending actually represented 40% of all new home loans written. Now that number's effectively dropped down to about 25%, so it's been a big drop back in interest-only lending. And as you might be aware, lots of investors take out that interest-only lending.
So I do.
You do, right?
I take interest because for me, Louis, it basically says that I have to pay less repayments each month, which means that I have better cash flow and I can potentially even buy more real estate. So the banks didn't like that.
They didn't like that, and what they also did is that the multiple, the income multiple that you're allowed to lend on, at one point in time, that used to be up to 8.5 to 9 times your overall household income. That's effectively been scaled back now down to about 5.5 times income. Now think of the purchasing power that's meant for borrowers, that the average borrower's purchasing power is dramatically reduced out there. Most home buyers aren't borrowers, they take out a loan.
So that's and this is what agents are saying to me, Louis. They're saying that they've got buyers that basically say, I cannot buy that property at that price anymore.
That's right. That's exactly right. And then on top of that, and I've experienced this firsthand because recently I went for a loan top up for a rental on our house. Right. The application time it's taken to actually process a loan has really stretched out. For a major, it's now pretty much over 4 weeks. Okay. Now think about the average auction period of time. How long is it from the time it's first advertised to the actual auction event?
It's about 4 weeks.
Right. Okay. So what does that mean for buyers out there? Well, right on the line, those last few days, they're looking to buy that auction, but they haven't got the money over the line.
So essentially, if you're not seeing that property up for auction right at the start of the campaign and going to a bank, you're going to run out of time.
You're going to run out of time for sure.
Okay, so Louis, we've seen the choking. You used it. What was the word you used? I like that word.
Chokehold on credit.
Chokehold on credit.
Yeah.
Right. And it's been like Chinese water torture slowly. It's been slowly happening since 2005. 2015, sorry.
Yeah.
And then what's happened, Louis, is all of a sudden 2018 is the year where real estate agents started saying there's no buyers.
Yeah.
They're not coming to the opens, or they're being picky, or there's no urgency.
Yeah.
So what has the impact been? You've said that volumes have been down by about a third.
Yeah, that's right. And of course, prices have fallen. I'm pretty sure your audience is well aware of that.
Yeah.
Sydney and Melbourne.
Sydney and Melbourne's been...
Yeah, so in Sydney from peak to trough, we're now off by about 8.5 to 9%.
Yeah.
Melbourne's off by about 6% peak to trough. And we think we're not done with this yet. It's still falling as we speak and likely to fall.
What's the worst market in Australia?
Well, it's actually Darwin. So Darwin's been pretty much crap.
Darwin's doing worse than Sydney?
Yeah, believe it or not, it's doing worse than Sydney. So the rental market's pretty much collapsed for the last 3 years now. Rents are actually off by about 35% in Darwin. Dwelling prices are off by about 25%.
Darwin's a weird place, Louis. Every person I meet from Darwin's got some sort of history. Like you end up buying.
What type of history is that?
They've run away from somewhere, and then you just say, "What are you doing?" They said, "Oh, I was in Queensland, or I was in fucking jail, or I was this," and they end up in Darwin.
Yeah.
Louis, so Darwin's the worst.
Yeah.
We've got volumes that have gone down.
Yeah.
Now, Louis, you made a comment there that's really interesting, and that is that you're saying it's going to get worse before it gets better, or more or less. Do you think?
Yeah. Look, I think 2019 is going to be another bad year. I mean, we've got to look at the reasons why the Reserve Bank and APRA stepped into the market. And the thing was that the market was getting a little bit overheated. The market was getting pretty throbbing, and particularly here in Sydney's inner west, things were getting very booming, right?
So out of all of Sydney, which part of Sydney has been smashed the most?
Well, it's actually been 2 main regions. It's actually been Sydney's Hills district, which has been hit on the rental market and the for sale market. So we're recording rental vacancy rates in a number of areas in the Hills district of in excess of 7%. That's on the rental side. And then on the for sale side, we think the market's come off by about 15% there.
So we're talking Borkham Hills, Castle Hills,
Rouse Hills.
That's what, Susan, that's where Hillsong Church, isn't it? Not that you'd know.
Yeah,
It's
Hillsong
with
Drive,
Hillsong Church.
another one, yeah.
Okay, so it's that area there's been hit.
And that's one region. The other region's here in the inner west, right? So,
Inner West. Well, I auction here,
Yeah.
and I know, and I think Louis, it's more like 10 to 15%.
Well, APM on their last quarterly report for the September quarter recorded the inner west down 5% just for the quarter.
Right.
So that's a big fall in one quarter.
3 months.
Yeah, and we're tracking the asking prices and the sales, and I can tell you our vendors are adjusting real quick here in the inner west.
Right.
Yeah.
Louis, let's talk about this. I mean, have you got a view? There's an election next year in March.
Yeah.
Okay.
Maybe May. I think it's
Maybe
May.
I'm sorry, maybe May.
Yeah.
Okay. Your view, if the Bill Shorten government gets in,
Yeah.
they have so we're all clear for all our viewers. What is the policy? What is the policy if Labor gets in on negative gearing?
Okay, so they want to make some significant taxation changes. One is on negative gearing. The other is on CGT, capital gains tax, so they want to reduce the concession. And they actually want to reduce imputation dividend credits. We won't talk about that tonight. Let's talk about negative gearing and CGT. So on the negative gearing front, they want to repeal negative gearing. They will have existing properties called, they will grandfather existing properties. In other words, what that means is that if you are already an investor, you already own an existing negative geared property, you still keep the tax concession, no problem. After D-Day, after they incorporate this change, if you buy an existing property, you will no longer get the tax concession. Right?
Okay, so the D-Day won't necessarily be, let's assume we wake up and Labor has won the election.
Yeah.
The D-Day won't necessarily be the day of the election.
No way, no.
Right.
So they actually got to pass this through Parliament first up. And I think how it's going to play out is we'll have the election in May.
Yeah.
Labor will then call a mini budget, most likely in August.
Yeah.
There they'll probably announce it, right, they're doing it, and they'll give a date for it. And I believe what they'll do is they'll allow the ATO some time to incorporate what is a massive change. And so I suspect what it will mean is it'll actually come in 1 July 2020. That's my bet. Who knows?
Okay,
But
so
I don't, it definitely won't come in on the day after the election. That's
okay, so Louis, does that suggest to me that if you're an investor, there might be a surge of activity of people buying to get the grandfather rule in their way?
There could be, but I think many investors, particularly savvy investors, will look post that time and consider what the market will do after that time. Let's consider the reason why they are doing this, what Labor's stated reasons for doing this. They want to lower house prices. And sure enough, this type of policy would actually do.
So that's the primary focus of the Labor government is that they want to lower the price of housing in Australia.
Yes, they do. That's right. They want to make it more affordable for first home buyers. They say that is their stated objective.
Okay. Can I ask you, Louis, you have done, as someone that's an economist and an analyst, you have gone off and done some modelling.
Yes.
So by the way, guys and girls, press the share video because I hope you realise that what's going on here is Louis Christopher is talking to consumers and to real estate agents on the basis that you rock up and you start speaking to your clients as a trusted advisor, that you've got knowledge, that you're not this commission breath salesperson that just shoots shit out of their mouth, that you actually go off and you listen to people that analyse the property markets and then you form your own opinion. Now, you formed an opinion based on some modelling. Let's go through the various things, Louis, that you think can happen.
Yeah, okay. So our view is that if Labor do succeed, they put this through, yes, we will see an additional fall in dwelling prices, keeping everything else equal.
Right.
This is an important thing because there might be some caveats to this where the Reserve Bank steps in and cuts interest rates and so forth, right? To offset
But you're saying if all that doesn't happen and all we're looking at is the government adopts this new negative gearing policy, you believe prices drop?
Absolutely they will. And how we know that, or why we state that this may well be the case, is that we've looked at countries around the world, first world countries around the world that have negative gearing and countries that don't have negative gearing, and there's a number of countries in between that have a limited form of it, right? and we've compared the gross rental yield of those countries versus our gross rental yield currently, and their comparative cash rate. And in instances where those countries where there is limited negative gearing or no negative gearing, gross rental yields are much higher. Okay,
so
we're seeing
yields are much
evidence,
higher.
we're seeing evidence overseas that properties that do not have this tax concession trade on a higher gross rental yield than what we have here.
What is the average capital? What's the yield, the average yield in Australia?
So the average yield in Australia, when we consider the capital city average, is circa 4%.
Circa, and that takes into account all kinds of property, is it?
That's right. So it's a bit higher for units,
right,
a bit lower for houses.
Okay, and what you're saying is, if this policy comes in,
yeah,
yields are going to have to go up from 4%.
Yeah, so we think that yields will go up from 4% up to about 5%.
Which means the result is,
well,
if you're an investor, you buy cheaper.
And that means a combination of two factors. Either prices will have to fall to create a rise in the acquisition yield, and or rents will rise to compensate. The reality is investors will demand to be compensated for the loss of the taxation concession.
Okay, so what you're saying is, if you're an investor and you're going to get smashed there,
yeah,
you want to get paid in another way. You want to get a return somewhere else.
My word, you do, right?
Okay.
And let's face it, property competes with other asset classes that do trade on a high yield already. So yes, it is likely investors will demand some type of compensation in the form of lower prices or a rise in rents to offset the tax concession.
Okay, let's look at other possible scenarios that
yeah,
may play out next year.
Yeah. Okay, so as we know, Sydney and Melbourne are falling.
Yeah.
The magnitude of the falls and the fact that these two cities are in sync with the falls is the first time we have seen this in about 30 odd years.
The fact that both cities are dropping
and dropping
at a similar
pretty
rate.
quick. Right. That's right. Okay. Now, these two cities, of course, represent the two largest cities for our economy. So there are ramifications for the economy overall. We've just talked about the big fall in new car sales. If the falls get steep enough and accelerate from here, I think the Reserve Bank of Australia will become increasingly concerned about the situation, and they may well step in the market and cut rates at some point. I'm not saying they will, and quite honestly, I've been concerned about the language that's come out of them across this year, that that they regard the falls. They've used the words recently that these are just gradual falls. They're a bit more than gradual. So
they're not gradual, they're very violent and sudden.
It feels to me like they're being a little bit behind the curve in terms of where the market's been. So there may well be a bit of catch up, and they may get to the point where they get quite concerned about the ramifications for the economy.
I mean, out of curiosity, Louis,
yeah,
this government, do they actually make decisions on the clearance rate? Because I'm going to touch on the clearance rates that we get
yeah,
published.
Yeah.
Does the government, do you think, make up their minds or take into
yeah,
account clearance rates when they're making decisions?
Well, we know the Reserve Bank of Australia does receive the data on option clearance rates. What we don't know, though, for sure is how much they rely on the so-called preliminary clearance rate versus what the actual final clearance rate is. They get a number of indicators in the marketplace. So, I must admit, I've been a bit surprised that they have been behind the curve on this one.
They haven't understood how suddenly and how violently
yeah,
this marketplace has moved. Louis, I'm telling you,
yeah,
in the marketplaces that I operate, houses have gone down $300,000-400,000.
Oh yeah,
right.
Yeah.
I've seen it.
Oh, well, we ran a story in News Limited on Friday, and I think perhaps a few of your viewers may well have seen it. Where
Let's touch on that story.
Yeah. So we basically did a story on distressed listings in and around Sydney and discounted properties, and it was actually the bulk of the properties were between a $1.5 to about $5 million mark, right? And so we were seeing discounts. So, like for example, a $4.5 million property basically having $900K lobbed off it to sell.
So you're saying the price bracket
yeah,
that was in this story that
yeah,
you actually had contributed to
yeah,
was the price bracket $1.5 million to $5 million
yeah,
is the most impacted price bracket.
Yeah, seems to be the case.
That sounds to me like it's a bloody great opportunity for an upgrader.
Well, it is. Yeah, that's right. So, look, across Sydney, prices are falling, right? Even at the affordable end on our numbers, prices are falling. But it does appear that it's that bracket between the 1.5 to 5 mil that seems to be hit the hardest. So there is an opportunity in this for potential upgraders.
First home buyers, good market?
Yeah, potentially, but in this you've got to be careful, and for any buyer, right, you're buying a property in this market, you've got to be careful you're not catching a falling knife, right, because we are saying prices will fall further from here. So you've got to be careful, and what this means is that if you're buying, be sure to go and get an independent valuation. Be sure to reflect that the final purchase price takes into account a little bit of downside risk. I think that's a fair call. So look, there is an opportunity to upgrade because prices in absolute dollars have come off more for that upper end property, except for the very top end, Tom. So we're seeing the properties over $10 million. Look, that seems to be holding. So your trophy assets, they're kind of holding in value for now.
So 10 million and over is holding.
Yeah.
Now, Louis, let's touch on these clearance rates because I do follow you on Twitter and you have got this obsession about calling it as it is because let's be very clear, guys and girls, a clearance rate that appears to be reported in the Sunday media includes uncollectibles, right? Uncollectibles. So maybe in your language, Louis, explain what actually happens. A real estate agent auctions real estate. If it doesn't sell, sometimes they don't report it to the data companies.
That's right.
Then there's a clearance rate that's reported based on what they collected.
Yeah.
What sold, what didn't sell.
That's right.
But what you're saying is that there's a high tendency of properties that are uncollected that aren't actually sold.
Yeah, that's right. They're unreported. So there's two main auction data providers out there. We're not actually one of them. They are CoreLogic and Domain/APM. So Domain/APM actually are first to report. They put out a file each Saturday evening for Sydney, Melbourne, Brisbane, Adelaide and Canberra. And I generally tweet out what those numbers are, including unreported, which they generally don't like to put out there too much, so we can work out, well, what's the true clearance rate. And the reality is, at this point in time, when it comes to Sydney and Melbourne, 25 to 30% of auctions are unreported on the day.
Right.
So that preliminary clearance rate is effectively only taking into account 75% of the auction market on the day. And what's generally happens is that a week later, APM will put out a revised file.
Which is lower as a clearance rate.
Every weekend it is always lower. And it just goes to show that a lot of these unreported auctions are actually failed campaigns.
Now, Louis, when you were in your job previously to SQM, you said to me off camera, you had a system, and the system was you would collect the data because if an agent didn't give you the data, you paid university students to go out there.
So when I was at APM, so I was at APM between 2000 and 2006, so I was initially the head of research, and then I became the GM in that last year. During that time, I was ultimately responsible for the auction collection exercise, and we would have a team of uni students in the office who would be making phone calls, sending out emails, getting the auctions, and then on occasion we would send out uni students to the auctions themselves for agents who would regularly boycott us, right? And we had to do this because at the time we weren't 100% owned by Fairfax, yet we had this contract with Fairfax, with the Sun Herald and the Age, that we had to get in 90% of the auction results on the day, and if we didn't, we were in breach of our contract.
Okay, so breach of a contract,
had to get it.
They were paying you well.
Yeah, that's right.
They were paying you well, so you're running around getting it.
Yeah.
And 90% is not the number today, is it?
No, God, that's right. Well, so the number now is coming in around 75%, to 70%.
Okay. Louis, I want to touch on the subject. But by the way, if you had cash available now, right, and that money was available for you to invest, what would Louis Christopher be doing today? Can I ask you?
Well, I run a business, so I invested a lot into my own business. That's SQM Research, and it's been going well.
How many people you got working there?
All up, we've got 11. Yeah.
So Louis, I mean, I remember that starting, and this is a good story for any business person. I mean, you had a business idea and you were working in a corporation.
Yes, that's right.
And you had this idea, I want to build this business, and you just hustled and grinded and you just worked your niche.
Well, the first couple of years I did it on the side. So I was running a joint venture actually in funds management, doing research on managed funds, and I ran SQM on the side to begin with. The GFC hit in 2008, and I went to my employer and I said to him, would you mind if I bring my business into the office and I'll cut down my working hours that I charge you if I can do a little bit of SQM in the office? They agreed, because I wanted to save some money during the GFC.
So you reduced your salary with your employer, and you brought SQM into
the office.
Okay, guys and girls, I'm telling you, anyone out there that wants to build a dream, I've got to say to you, you can start building your dream while you're working for someone else building their dream, right? If you work, you can have a side hustle, right? So I'm going to urge every guy or girl out there that's got big dreams, right? Don't go off and say, oh, I'm just quitting my job, I'm going to start this little business. Man, go up there, put in the extra hours at night time. You must have worked your ass off during those early stages.
Oh, my word, I did, but I loved it, right? So I picked something that I loved, and that was, covering the property market, covering the housing market, doing property data and doing it right, Tom. I've always been a big believer in transparency of information. And why? Because when I was a real young fellow, I saw some real bad things happen to my grandparents, and then I experienced it myself when I bought my first property. So I was very keen to improve the level of property information that was out there.
Man, look, I can't get over, like in real estate right now, I cannot get over the fact that there is no clear data.
Oh, it's crazy.
If you want to, hypothetically speaking, Mr. and Mrs. Smith that live in, let's call it, they live in Bankstown, and they wake up to decide to sell their home for the first time in 30 years, right? They're going to open up the local paper, they'll see some agents, advertising, they'll go on a realestate.com domain, they'll look at that. But how does to me, there's an unmet need out there in the market where a consumer can turn around and truly work out the effectiveness of an agent. We talked about that off there.
Yeah, that's right. I mean, and let's face it, look, there is a lot of conflicting and confusing information out there. There's no question about that. I think we've gone past the peak in terms of quality information, sadly. But when it comes to agents, this is something we're working on now. So we're looking at building an index or basically a list of the best performing agents out there. But not best performing agents in terms of how much dollars they make.
Like the REB top 100 is about, the sales and commission. So you're talking
we're taking more from a consumer side, right? So, okay.
What would you look at?
How long does it take an agent on average to sell a property?
So days on market?
Days on market. How much discounting occurs with that agent?
So price it's listed versus price sold?
So you would know the term buy the listing, right?
Buy the listing, overpriced it.
So those agents who buy the listing will get snatched on this type of...
Correct, because what they've done is they bullshitted to get the business.
That's right.
And then there'll be a report that will be able to show that they reduced. So auctions would be a bit hard, wouldn't it?
Yeah, to an extent, but we would also have another measure called the overall sales conversion rate. So listing to total sales. Right? If you want to employ an agent as a consumer, as a seller, surely you'd want someone who's got a high sales conversion rate. They've got a track record at moving property.
Okay, so I'm just thinking of the KPIs that would separate an agent. Days on market, 100%. List to sell ratio. What proportion of your listings do you list that actually sell?
That's right.
The third one would be price listed versus price sold. Were you the type that overpriced it, bullshit it, then use this old term, we'll get them down in price and we'll crunch them down, which is not what I want real estate gym members to be doing. I want you to win business because you're good at the process, and it's the process and not the promise of a price that's going to get owners top dollar, and that's what I want people to be doing.
And then finally, has this agent been in trouble?
Has this agent been in trouble?
So, for example, you can look up the Department of Fair Trade database and things like that. You've got to be careful. I mean, that's based on the number of complaints made about the agent. If an agent's just had one or two complaints, from some crazy people or whatever, sure. But if you see an agent where like there's hundreds of complaints, right, they shouldn't make the top agent list, in my view. Right, something's not right there. Okay. So we'll look at that as well. So this is something we're building as we speak, and we hope to release some results soon.
Are you collecting that data now?
Oh yeah, my word, we are. So we monitor every listing in the country, and we get all the sales coming through too.
And you'll sell that to consumers?
We might not sell it, we might just put it up there.
Right.
Yeah.
Okay. So Louis, out of curiosity, you wake up, you go to work each day.
Yeah.
What are the sorts of things you do in your work day?
Well, SQM Research is effectively two businesses in one. So there's a property data business, which we've talked about, but we actually rate investment funds of all asset classes, and that doesn't get a lot of media attention. It's not very sexy. The property, of course, is naturally where there's a lot of topical interest. But I do a lot of work on that front as well. And
So sorry, you look at asset classes that aren't property as well?
Oh my word, we do. We look
like
at equities. We look at equities. We look at fixed income. We look at alternative assets. We look at managed funds. Quite a lot of our time we look at managed funds, and we actually do that for financial advisors. And the link between the property data and the ratings on investment funds is actually financial advisors who actually increasingly need both. They need a rating before they recommend a product.
Do you think that most financial advisors like equities more than real estate?
They have historically, right? And I could take a rather sort of cynical view on that because I haven't been able to earn a commission on real estate, right? Until recently. That's a bit of a nasty comment. It's not the case, obviously, with every advisor. But one of the main reasons is because financial advisors have to get a license with the Australian Securities and Investment Commission. That license doesn't cover property.
Right.
Okay, so it's one of the main reasons. They can't formally make a recommendation on, say, a house.
So there has been a past history where there's a financial trail between an advisor and equities.
Yeah, that's exactly right. Now, there's been laws that step in to reduce the trailing commissions on financial advisors. So advisors have been looking at other revenue income. Ultimately, the best source would be that the financial advisor charges their client, the investor, and that does happen, but unfortunately not many investors can afford those type of fees. So it's a bit of a grey, dirty old area in many respects. There's many good advisors out there, and like with every industry, including the agent profession, there's some bad apples that ruin it for the rest.
Louis, I want to ask you, is this federal policy that Bill Shorten and the Labor government have, is it a concern?
It's a concern, yeah. I think it's a concern in terms of when they actually put this in. I've been on record to state that overall I'm a believer in taking negative gearing away over the long term, but it's the way you execute that. This tax has actually been with us since 1936. A tax concession, negative gearing's been with us since 1936. It was brought in initially to get help the country out of the Great Depression, right? So it's been around for a very long time.
This is are we talking about the negative gearing or the negative gearing? The negative gearing.
Yeah. So that's been around since 1936. Okay. So if you're going to make such a tax change, you've got to do it carefully. And one thing you don't do, Tom, is you don't do it during a housing downturn.
Because, Louis,
that doesn't make a lot of sense to me.
Yeah, but the point is, if the Labor government wants to turn around and say we need to put this policy in because we want to actually drop housing prices because it's better for the people of Australia, they've already achieved that.
Well, the housing market has fallen, that is correct, right? So, I mean, they're looking for, all right, let's make a long-term change, okay? Now, I am a believer in taxation change. One of the things I believe is, all right, get rid of negative gearing, let's get rid of stamp duty as well. I mean, if we want to try and improve housing affordability, okay, when you have such massive stamp duties on there, it's not really conducive to home buyers moving on, is it? Right? Because a home buyer itself has to buy and have to pay a lot of stamp duty. And surely it's better to make the market...
Guys and girls, tag Bill Shorten, I don't know, can you tag Prime Minister Susan? He's not the Prime Minister. It's a fucking worry if he becomes one, but that's another story.
Tag the group.
Guys, tag a group. Get rid of stamp duty.
Now,
That's a good one.
Here's another one, right? Because I'm
Get
sure-
rid of stamp duty.
Yeah, stamp-
Great fluidity in the market.
You make a change long term, right? And all we are saying is, okay, be careful in terms of when you execute this. If you do it during a downturn where the economy is a bit vulnerable, I can guarantee now construction's going to get smashed further. Construction, right? Total construction in this country basically equates to 10% of all employment. Now, construction includes mining, it includes infrastructure, but it certainly includes housing.
1 in 10 people are involved in construction.
That's exactly right. So this is how it can feed through to the economy, and that's why we've got to be careful in terms of when we actually execute this change. And I don't believe we should be doing it during a pretty big housing downturn. Okay.
Guys and girls, Susan, let's tag Louis Christopher. He's been kind enough to come here and give his time and his intel. Let's tag him and get, some traffic
There's quite a few people on my side watching as well. I can see I have a few housing bears who like to follow me because we do call it straight, and I appreciate their feedback as well. And I can see a few of them there are having a go at my opinion on negative gearing. Fair enough, but look, it's just our view. This is a big change, and you've got to be careful with the timing of it.
No one has a monopoly on the truth, but guys and girls, let me tell you, particularly if you're in real estate, hey, don't spend up too much, because I've got to tell you, at the moment, you've heard the man say it, we've seen turnover dramatically reduced. Less turnover equals less commission. Less commission means less money. What do to keep going? You either make more sales, you work more effectively, or you also add to that, just reduce some of those ego expenses. And
yeah, interesting. The new car sales have been smashed, right? We know who buys new cars, right? It's
agents
doing
love Maseratis.
They do indeed. So yeah, we know agents are hurting out there. That's for sure.
All right, Louis Christopher, thank you so much. Guys and girls, hello to everyone. I haven't had a chance to say hello. Do me a favour. We've got to announce a winner, Susan, to the coaching.
Yes, his name rhymes with Save a Buyer. It's David Dwyer.
David Dwyer is the winner of the 30-minute coaching session. I'm so happy for you, David Dwyer. By the way, that's David from Dr. Fred, isn't it? David, I'm happy that you've got it. You won it. We had the award last week. Guys and girls, thank you so much. Press that share button. Bernard, good to see you all. Do me a favour, guys and girls, press that share button, tag someone, because today you've listened to information that's going to help you sit at a listing presentation and not sit there like this desperate, needy salesperson with commission breath. You're going to sit there and you're going to turn around from a position of strength and say, let's go through all these scenarios. And can I give you a word of advice, guys and girls? Right now, if you've got a vendor, I would be recommending they come onto the market sooner rather than later, because they're better being on the market early January, not late January when there's an onslaught of property. After Australia Day, Louis, there's a lot of real estate that comes on the market.
Yeah, the best time to buy is between Christmas and January 26th. I find you see some pretty big discounts there because sellers, they've failed in their spring sales campaign, right? They're keen to sell. So buyers, have a look, have a sniff. Just be careful. Make sure you take into account the downside risks. But yeah, it's potentially you could pick up some bargains between now and the 26th of Jan.
Guys and girls, God bless. Signing off. See you later.